Hi, this is Russ Squire. I'm the president of a company by the name of 1031 Property Exchange. And this is a multi-part seminar that we've developed called Using 1031 Exchanges to Grow Your Real Estate Wealth. And I would highly recommend watching all the segments of this seminar. This is going to be one of the most valuable seminars you'll ever watch in terms of tips and tricks and understanding exactly how to use 1031 exchange for your own benefit, and also just how to do it within the guidelines and legal guise of what is IRC 1031 and the safe harbor regulations. So anyway, it's not too long. Of course, we tried to break it up so you could watch it in parts and segments. So let's get right into it. These are the offices of 1031 Property Exchange. We're located at 1087 Stone Ridge Drive in Bozeman, Montana. Our contact information is there. There's the phone, the website, which is 1031property.exchange, and then my direct email, which is russ@1031property.exchange. So you can always contact us if you have questions or any type of maybe more detailed exchange questions, or perhaps a scenario we didn't go into. So we will keep the ball rolling here. Okay, so a little bit of my background. I was 82 graduate of Montana State University with degrees in finance and economics. I worked for Bank One, a bunch of big companies. I worked as an investment advisor. I founded a company called Big Sky Property Exchange back in 2004. And I've done due diligence on just all kinds of real estate development projects. I've invested a lot in real estate myself. I've owned multifamily apartments. I've owned large-scale real estate development. I've done a small residential development, built homes. So I've done quite a few different things. Been quite involved in community service in this local market as well. So anyway, let's move on with the presentation. So what is a 1031 exchange? Well, a 1031 exchange is just a provision in the Internal Revenue Code that allows the owners of property held for investment or business purposes to roll over all of the equity in their existing property into another property without paying capital gains tax, depreciation recapture, and state capital gains tax. And it's the combination of those three taxes that's significant. I hear people all the time say, oh gee, who cares about 15% capital gains? Well, that would be nice if that was the case, but unfortunately, because you've owned a property for a while over a period of 5, 10, 15 years and depreciated that property heavily, and because states also charge capital gains, you can see as much as 30 and even 40 cents on a dollar disappearing if you don't use 1031 exchange. So it's a very powerful tool to grow your wealth, because you can't grow what you lose, and it's keeping your pile intact. That's the most important part. So think of it like a rollover or a suitcase where the gain is portable between properties. Who exchanges property? Well, believe it or not, over 65% of all the 1031 exchanges performed are for 1 to 4 unit rental properties. So the other 35% are commercial and ranch, and yes, they do represent a larger percentage of the overall value of 1031s, but that's just because of their transaction size. So, okay, so what does a 1031 exchange look like on a flow diagram? Well, this is a diagram I did up. Basically, you can see at the top is the exchanger, and that's the person who's going to be doing the exchanging, selling a property and purchasing new property or properties. So the exchanger transfers a deed, you can see on the left-hand side, to a buyer. The buyer in turn transfers the cash to the qualified intermediary, or 1031 property exchange. Now, in all reality, the cash doesn't come directly to us, and you'll see that in the next flow chart. It gets wired from a title or closing company directly to an escrow bank. And we then give instructions to that escrow bank to wire out the proceeds to a seller, who in turn directly deeds the newly acquired property to the exchanger. So there is the allowance for direct deeding in 1031 exchange. So it doesn't actually have to be where Big Sky Property Exchange does not hold the deed to the property itself. But over the period of time that follows the first sale, you've got 45 days to identify property, and that can be by several different property rules that we'll discuss in a later segment, and then you've got 180 total days to close on the replacement property. And if you do all that correctly, then you end up with a qualified exchange and you don't have to pay any income tax. So it's a great deal for investors. In fact, there's no other asset out there. I was in the investment business for years, and stocks, bonds, real estate investment trusts, other types of financial assets you can own to increase your wealth all have to pay tax based upon gain. So for real estate investing, it is a unique opportunity. So how does the flow of money work in a 1031 exchange? Well, essentially, there's a closing on the far left-hand side at a title company for relinquished property, the property you're selling. We send instructions to that title company. You definitely want to engage 1031 property exchange prior to any closing, because you've got to have the right language in the buy-sell agreement. There has to be an acknowledgement of the exchange from the person that you're selling the property to. So there are some things that have to take place that take several days that you'll want to have done ahead of the initial closing. Then once that closing is completed, and we've reviewed all the documents to make sure the closing statement and other things are right, cash then that gets directly wired from the title company to the escrow bank. Now there can be cash, as you see, going to the exchanger, but if you do take cash out of an exchange, there's taxable boot. And there are ways to avoid that and still get cash out of an exchange, and we'll talk about that in a later presentation as well. Generally, instructions flow back and forth from or 1031 property exchange to the title company. Also, we're in correspondence with you as the exchanger. We also send instructions to the escrow bank, letting them know when to wire proceeds and review closing documents for the replacement property that you'll be purchasing. So that's a little bit of a money and instruction flow diagram for 1031s. So that helps to put it in perspective. I know I can see things better when I can see a visual. So what is a 1034 exemption? 1034 is for primary residence, and it allows you up to $250,000 in gain to be taken out tax-free for a single taxpayer and $500,000 in gain for a married couple filing a joint return. And you see 1034 used in combination with 1031 quite a bit. Oftentimes people own a larger piece of land or property, and that property may be bifurcated, which is just a fancy word for separated, in a way that part of the property is held for investment and part of the property is primary residence. So that's why we're bringing up the 1034 exclusion, is because you do see it used a lot in 1031 exchanges. The biggest mistake people make regarding the 1034 exclusion, they get confused and they think the $250,000 or $500,000 is actually the gross selling price. It's not, it's the gain. So you can sell a $2 million home as a married couple, and as long as your cost basis is not below 1.5, all the gain is exempt from taxation. So it's not the gross selling price, it's the amount of gain embedded in the home, and that would be your purchase price plus any improvements would establish your cost basis. So if you've done improvements to the home, of course, and kept records on that, you could have elevated your basis by doing a remodel, renovation, anything of that nature. So okay. So we're going to try to keep this fairly brief on the first slide, but the exemption on the 1034, 2-year holding requirement. You can sell a home every 2 years. It's a very popular trick amongst home builders. Build it, live in it 2 years, sell it, move out, build another one. What if the gain in the 1030 is greater than the 1034 exemption? People ask me a lot, what can I do? Well, a couple different things. One, if you got a large property, you can bifurcate or separate out a chunk of land. Somebody owns 100 acres, and you could associate maybe 10 or 20 acres with the property and sell the other remaining 80 or 90 acres as 1031 exchange, and that can help alleviate that problem. The other way you can do it, of course, is convert part of the primary residence into a rental property and then use the 1034 combined with a 1031 exchange. But if you're going to convert it to a rental, you've got to make sure it's got a 2-year holding period. So anyway, that kind of wraps up our first section. What we'll do in part 2 is we'll delve into 5 basic exchange rules and the 1031 wealth machine. Thanks for listening to this segment. This is Russ Squire with 1031 property exchange. I hope you have a great day.